Assalamualaikum warahmatullahi wabarakatuh. Hello everyone. I'm going to report my mini report, and today's topic is this year Grab Southeast Asia is reportedly considering a US IPO. Okay, first of all, I would like to introduce myself. My name is Ilham Satmata Perdana, and I'm an student exchange from Indonesia, University Pendidikan Indonesia, and this is my first video assignment. Okay, now let's jump into the topic. Three resources familiar with the matter told Reuters that Southeast Asia ride-hailing and food delivery giant Grab is planning to list in the United States this year, thanks to strong investor interest in initial public offerings. A source said that the IPO may raise at least $2 billion, which may make it the largest overseas equity offering for a Southeast Asian company. He said that the market is very good, the business is doing better than before, and it should work well in the general market. The source said the plan, the scale and timing of the problem has not yet been and depends on market conditions. The source declined to be named because they have no right to speak on the matter. Singapore-based Grab also declined to comment on a potential IPO. For more detail about IPO, here is a snippet from CNBC that explains what an IPO is.
As the saying goes, ideas are a dime a dozen. Acting on an idea, though, can make all the difference. Say you turn your vision into a startup. It starts small, then it gets even bigger. Then it gets even bigger. Until one day, you may get to decide it's time for your company to go public. IPO stands for Initial Public Offering. It's the very first sale of a stock issued by a company on the public market, which essentially means you're turning your private company into a public one. So when it's private, a company is normally owned by a small number of investors. That usually consists of people like you, your friends, or parents, plus professional investors like a venture capital firm. Once the company goes public, you're opening up that business to be owned by a large number of people. In effect, the firm goes from being owned by just a few people to potentially tens of thousands of shareholders. To commemorate the event, most stock exchanges hold a ceremony of sorts. At the New York and London stock exchanges, you'll ring the bell. At the Hong Kong Stock Exchange, you'll strike the gong. So why go public? Well, going public raises a lot of cash for a company. With that money, it becomes easier to scale and grow, invest in infrastructure, and attract top candidates. Plus, there's the bragging rights you get from being listed on a stock exchange. It's important to note that large companies can also stay private too. IKEA, Mars, Aldi, and State Farm are just some examples of massive companies that are private. After all, going public isn't a simple process, normally taking about 4 months to complete. The company will start with finding what's known as an underwriting firm, typically an investment bank or several. If and when the firm takes on the job, they put up the money to fund the IPO, essentially buying the shares before they're actually listed anywhere. The firm works with the company to determine what type of security to issue, an offering price, the number of shares, and the optimum time to bring a company to the public market. In the US, they also handle registering with the US Securities and Exchange Commission, which makes sure all of the financial information has been disclosed and is accurate. Then you're finally good to go. The underwriter's goal is to sell shares to the public for more than it paid the company. After all, that's how they make their money. But going public can also mean a nice payday for the business's founders and early investors. You often hear about people becoming millionaires or even billionaires after their company goes public. Here's why. If you've worked at a private company that's intending to go public one day, sometimes part of your compensation is given through equity, part ownership of the firm. It's a way to hire talented people without a lot of cash up front. And if the company does go public, you get a piece of it at its new valuation. Here's an example. When Snapchat went public in 2017, its founder, Evan Spiegel, scored big. Spiegel got a stock grant of $636 million when the company went public. The following year, he sold more than 2.6 million shares. The sale of his stock was equivalent to $50 million. The number of companies going public is constantly fluctuating. Globally, 1,764 companies floated in 2017, a nearly 50% increase since 2016, and the most IPOs since 2007. 189 of 2017's IPOs were in the US, a 70% increase from the year before. A few of the biggest IPOs in history include Facebook, Visa, and General Motors. And in 2014, Alibaba smashed the record with its debut on the New York Stock Exchange, bringing in $25 billion. All that said, going public has its drawbacks. Publicly traded companies are subject to oversight by regulators like the US Securities and Exchange Commission. And once you list your company on an exchange, you're not just reporting to yourself anymore, you answer to all your shareholders. If you don't make them happy, you can be sidelined or even fired from the company you founded.
Grab supporters include SoftBank Group and Mitsubishi UFG Financial Group. The company has grown rapidly since its inception, and in 2012, it became a ride-hailing company in Malaysia and became the most valuable startup company in the region with a market value of more than $10 billion. The company also provides financial services and recently obtained a digital banking license in Singapore. The company said this month that group revenue has returned to a comfortable level above pre-pandemic levels. The company also stated that its riding-hailing business is in a break-even state in all operating markets, including Indonesia. The company expects its food delivery business to achieve break-even before the end of this year. The IPO plan will be carried out after the merger. Discussion with Indonesian rival Gojek is cancelled. According to Reuters report this month, Gojek and Indonesia's e-commerce leader Tokopedia are in debt negotiation on a 18 billion US dollar merger ahead of potential dual listing with Jakarta and the United States. Okay, in this case, I will analyze how a company can conduct an IPO and what benefits will the Grab company get if it does an IPO. The de facto target of several startups seems to be the initial public offering IPO. Founders, investors, and public analysis always want to know when will an IPO be made by this company. How many shares will this company share when an IPO is finally made? And why has the company not completed its initial public offering? Many people assume that any successful business is publicly owned. There are many growing private business. There are many risks and drawbacks associated with going public, and as such, an IPO might not be sufficient for every business. Completing an IPO typically entails significant change to the structure of the company, money, and management. Once listed, several roles and reporting responsibilities will have to be met by the organization. There are many advantages and costs, and due thought is needed for the decision to go public. In a few steps, a company can conduct an IPO where the business employs an underwriter, almost always an investment bank, to advise and finance the IPO. By means of so-called roadshows, banks typically communicate with institutions and investors to make them initially interested in IPOs and assist in disclosure and regulatory procedures. Underwriters can also guarantee an initial public offering of shares, acquiring all the goods of the company at an agreed price than publicly selling the shares. A strong engagement is calling this. A best effort deal is another alternative, where the underwriter sells the original shares but does not offer any financial guarantee. To perform a true audit of its accounts, the company retained a third-party accounting firm with the help of its underwriters. The company compiled the CEC registration papers. These include a prospectus circulated to all prospective investors and the release of private documents on the CEC only. Detailed financial reports, including third-party audits, company management information, future liabilities, ownership of private equity, and business plans are contained in the registration documents. To ensure that all information in the registration records is correct and complete, the CEC has carried out due diligence. The prospectus is sent to prospective investors after approval by the U.S. Securities and Exchange Commission, and the date of the initial public offering is decided. If an agreement on the initial price or number of shares has not been reached between the company and the underwriter, they can now consent. Stocks will finally be released for public sales after completing these measures. When a company goes public, it usually sells a large number of new company shares during an initial public offering. In this way, a large amount of capital poured in without incurring debt. An enterprise may use capital in any way it deems appropriate, as long as purpose conform to the guideline of the stock perspective. A lease business could be more appealing to prospective hires, thereby offering an incentive to develop its workforce significantly. The additional funds allow the organization to pay higher wages and over expanded benefits. Going public helps the organization enjoy a greater reputation instead of a relatively insignificant small business. Customers, investors, workers, and financial institutions may view the company as a major player in the market. In the process of raising capital or receiving funding in the future, being a listed company helps, as required the rise in company valuations make it easier to raise additional private funds. In the future, the business will perform a secondary issuance and sell existing shares to raise more funds. If the Grab company becomes an IPO in the US this year, there will be many benefits such a large amount of capital flows without incurring debt. The company can be more attractive to prospective employees, customers, investors, workers, and financial institutions can see companies as a major player in the markets and be able to raise capital or receive future funding. Grab has expanded into financial services, building travel offerings, food delivery, and e-wallets. And in effort to become on an all-in-one service in the Southeast Asia region. And the fresh money they will get will be used to develop a Grab into super app in Southeast Asia. And they are preparing for expansion to more other countries such as Middle East. Their rival Gojek reportedly prefers to merge with Tokopedia. The IPO plan came about after discussion on the merger with Indonesian rival Gojek were cancelled. Gojek and Indonesia's e-commerce leader Tokopedia were even mentioned in further talks for 18 billion US dollar merger ahead of the possibility of dual listing on the Indonesia Stock Exchange and in the United States. This will make it difficult to grab if this will happen, especially if the Gojek Tokopedia also conduct an IPO. And the way the Grab is done will make the Grab competitive with the Gojek. That's all that I can report. Thank you for your attention. Thank you for watching. I'm very glad and proud at the same time to uh, participate in the student exchange program at UAT Malaysia. Thank you for the opportunity and Assalamualaikum warahmatullahi wabarakatuh.